morning, futures indicating a sharp sell-off, down 613 points on the Dow Industrials. A host of issues playing into the selling this morning. China could be seeing its Lehman Brothers moment, a crisis deepening for its second largest developer, Evergrande. U.S. Treasury Secretary Janet Yellen out with a new warning for lawmakers to raise the federal debt limit. And there's a two-day Federal Reserve meeting which kicks off tomorrow. And we will find out on Wednesday at the press conference whether or not the Fed will begin tapering the stimulus that is still in the market. Joining me right now is Crossmark Chief Investment Officer Bob Dahl. Also joining the conversation all morning long, Dagan McDowell and Joe Concha. Great to see everybody. And Bob, thanks very much for joining the conversation this morning. What's your take on this sell-off that we're waking up to?
To me, Maria, this is not a surprise. The surprise to me is it's taken this long. I mean, the accumulating list of things, I know we're blaming China real estate, and that could be the catalyst, but think about it. Economic and therefore earnings growth is slowing. It's becoming increasingly clear that inflation is not all transitory. The Fed at some point will cease to be the market's best friend. The uncertainty coming from the fiscal circus in Washington, D.C. I could go on. Shall I mention France recalling its ambassador from the United States? That's not good. And underneath the surface, technicals are becoming less positive. So we're still in a bull market, Maria, but we could be in a 5 to 10% correction. We expected one sometime before the end of the year. Maybe this is the beginning of it.
Yeah, I mean, you have been getting cautious over the last little time, and I want to get your take on whether or not this is, in fact, China's Lehman Brothers moment. Worry is spreading as Chinese policymakers stay silent on whether or not the government is going to step in to prevent the collapse of Evergrande. This property company shares now at an 11-year low overnight. Interest payments on 2 Evergrande bonds are due this Thursday. The deadline expected to be a key test if the company will be able to meet those obligations to debt holders. Bob, we already heard from the CCP, and they said Evergrande will not be able to make these payments. China is facing a Volcker moment, according to Nancy Lazar at Cornerstone Macro, where deleveraging triggers a sharp downturn. So do we know if U.S. banks will be on the hook for some of these payments? And is this going to be, sort of contagion-like, which is what we saw during the Lehman Brothers fall?
We have more questions than answers. We don't know about the banks. I know people are digging in to try to find out, do U.S. banks have some obligation here? It is clear that they're not going to make the interest payment. That is Evergrande. They're already paying out some in real estate to debt holders, which can only go on so long. So, yeah, this is a bit of a moment where China is going to have to decide, are they going to provide liquidity to get the macro situation calmed down, or does it become more of a crisis? With interest rates this low, it already forgives a lot of sins, but not being able to make a debt payment is spreading to other real estate issues, as you know, in China, into Hong Kong, and it could become more widespread, Maria.
Yeah, and then there are issues here at home, Bob. U.S. Treasury Secretary Janet Yellen calling on Congress to raise the debt limit or face an historic fallout next month. She wrote an op-ed in the Wall Street Journal, and Yellen says the U.S. has never defaulted, not once. Doing so would likely precipitate an historic financial crisis. First line of the op-ed, Congress has raised or suspended the country's debt limit about 80 times since 1960. Now it must do it again, if not sometime in October. It is impossible to predict precisely when the Treasury Department's cash balance will fall to an insufficient level and the federal government will be unable to pay its bills. Bob, not what you want to read.
Not really. I called it the fiscal crisis and circus in Washington, D.C. The debt ceiling is one of many elements of that. My guess is the probability of default is very low, but the probability of a lot of drama around it is, as you're already pointing out, pretty high, and that's unsettling to markets. We've been through this before, even without a default, and markets can have a sell-off as Congress fiddles around and tries to negotiate and get somewhere. Lots of issues for Washington, D.C. to deal with in the halls of Congress.
Yeah, I mean, I think Nancy Pelosi really wants to attach the debt ceiling to this infrastructure vote, forcing Republicans to vote yes to raise the debt ceiling or be shamed for not doing so. Bob, real quick before you go, just tell me, are there any places to hide in a market like this? We're likely going to see a decline right out of the gate of 600 points. What do you do in the face of that kind of selling as an investor today?
Well, if you're on leverage, which some people are, having enjoyed a doubling the stock market last 18 months, you got to cover some of that. If you're fully invested and want to take some profits, don't hesitate to do that. But on the other hand, if, as a lot of people have a lot of cash on the sidelines, start looking for bargains. The bull market is not over. We still have an economy that is in good shape. We have earnings that are growing, albeit at slower rates than the unbelievable blistering pace of the second quarter. So I would look for opportunities, but take your time. You don't have to be a hero.
All right, Bob. Great to see you this morning. Thanks very much for checking in. Dow Industrials down 642, NASDAQ down 226. Bob Dahl, we'll catch up soon. Thank you, sir.